provide a platform for public discussions on topical issues in Kenya's economy and public affairs. And in the last few years, especially after COVID started, the COVID-19 pandemic commenced, one of the things that has happened is that there's been clamor by the public for government to respond. In that response, the government of Kenya, of course, through the Ministry of Health, has initiated and implemented some policies. At the back of those policies, obviously, is some resources that were put in the government's hands. All of them being public resources, and there have been questions generally around how that money was used and whether it found the right course or whether it served the right causes. Quite apart from the fact that it is just public resources going for a public purpose, which is to protect the health and to provide people with the possibility for cure, vaccination, and providing all commodities, this money is spent through the pipeline of public expenditure. And for that reason, it comes to a question of public affairs generally, to see how well it is done, how government planning, together with the resources, met the challenge of a public health care, which is extremely serious, but also more importantly, as a think tank, just to find what are lessons that could be learned, because I think one of the things that the COVID-19 pandemic has reminded us of, not only that it's going to be an endemic now, but it's also reminded us that the health of public, what we see as the outcome of public health initiatives, also depend on the pipeline of public health and public finance management infrastructure. So the Institute of Economic Affairs has been part of a project, which my colleagues will explain. And one of the things that we are doing is to track and to find out how government spent, what are the sources, and what government spent the COVID-19 funds, or funds that were provided from public resources, but also from resources coming from government's partners, as we call them, in the expenditure of public to respond specifically to the challenge of the pandemic. And so there are special audit reports that have been carried out on the money that was made available for COVID-19. So those resources become, in a way, an important part for us to see what lessons emerge, but also what exactly does it mean for the pipeline. But accountability across the entire expenditure lines is one of the things that we're discussing today. So the IEA has a Constitution, Law and Economy Program, and part of what the Constitution, Law and Economy Program does is to track the performance and to raise the effectiveness of key institutions that have been established by the Constitution, among those being the Office of the Auditor-General and the other accountability institutions. So today we'll be discussing special audit reports on the utilization funds, especially because the Office of the Auditor-General conducted some of the audits, but more importantly, because it's just important for the public to get a view about what the outcomes of these audits are and what they tell us about not only the health of public health infrastructure, but the public finance infrastructure, and lessons that we might use for strengthening public financial management systems generally, the audit function as well, and also to elevate the discussion around the expenditure of COVID-19 funds. So without further ado, I'll invite my colleague, Jacqueline Kagumi, who's the program officer for the CLE program, and she'll discuss two specific themes or reports. The first is a special report on utilization of COVID-19 funds by the Kenya Medical Supplies Authority. So the Kenya Medical Supplies Authority, or KEMSA, was in the front lines, headlines rather, last year regarding how the money was spent. And the second part was basically a special audit report on utilization of COVID-19 funds by the national government itself. So these are two chains. So the first is the KEMSA, a specific audit report on KEMSA, and then the second is the audit report on utilization of the other funds specifically for the national government. So Jackie, you can go ahead. Before Jackie comes in, let me just advise on something. Ladies and gentlemen, the chat box is open. So on the floating menu bar right at the front of this application is a floating menu bar that allows you either to raise your hands or ask questions. So as the discussion goes ahead, because it'll take about 45 to 50 minutes, please raise your questions out there. And if you have any questions, you can put them there. As soon as the presentation is over, they'll be read out to our panelists who respond to them. So that's the first. The second is, with the exception of the presenters, Please keep your microphones muted during the entire presentation. In addition to that, please keep your the cameras switched off as well, just to one, to enable us to concentrate, but also so that the recording only has the face of whoever is making the presentation. So go ahead, Jackie. Thank you.
All right, thank you very much for the introduction, and good morning, everyone. So I'll go right into the, Kwame has mentioned that this is a presentation prepared by the CLE program, and I'll be making the presentation together with my colleague, Leo Kimboy. So I go to the outline of our presentation. And basically, as has been mentioned, we conducted analysis of 3 special audits prepared by the Office of the OAG. So if you right now go to the OAG's website, the 3 special audits that are specific to utilization of COVID-19 funds that you'll find there are what we'll be discussing today. So the outlay of our presentation for each of the 3 distinct reports that Kwame has mentioned will include first a summary of the findings per the OAG report. Then second, we will discuss the violations relating to all COVID-19 response procurement because that seems to be a big part of those reports. And then next, we will discuss the audit queries that relate to managerial responsibility. And then lastly, we will highlight key messages from each of these 3 reports and our recommendations. So that's the outline of our presentation. I start the presentation by looking at providing a brief background. That's just before I get into now specifics from that, the first report that I'll be discussing. So the first report I'll be discussing is the Special Audit Report on Utilization of COVID-19 Funds by the KEMSA. And this was for the period 13th March to 31st July 2020. Just to put it in context, special audits, as most of you are aware, are usually carried out when it is suspected that laws or regulations have been violated in the financial management of an institution. So separate or distinct from the normal types of financial audits, special audits are usually have more specific terms of reference. So they are tightly defined types of audits, and they are conducted specifically to probe into a specific area where it is anticipated there may be some gross violation of law or some violation of regulation. And as you'll see in the reports that we discuss here today, the bulk, the specificity of this report was mainly to focus on procurements related to COVID-19 or the entire emergency expenditures. So you just distinguish that from the normal financial audits, which are an independent examination of the financial information of any entity. So moving on, starting now, I start with the summary. If you look at the KEMSA report, the Special Audit Report regarding the utilization of funds by KEMSA, it starts with an executive summary, and looking at the summary, it has highlighted the 7 things that you see before you, and I will talk about this in detail, but also just to mention that this audit was carried out at specific requests that came from the Senate Ad Hoc Committee on the COVID-19 response, and we also had another request that had come from the PIC, the Public Investment Committee of the National Assembly, as well as the normal Senate Health Committee. So you are all aware that a committee was set up in the Senate following the COVID crisis that was supposed to respond to this. So those 3 committees, the Ad Hoc Committee, the Health Committee, and the Public Investment Committee of the National Assembly made a request for this special audit to be carried out by the KEMSA. And in particular, the committees required or requested the Office of the Auditor-General to report to them, to assess and report to them whether KEMSA had adhered to the Public Procurement and Asset Disposal Act, just basically for purposes of the procurement of medical supplies that were to be used in responding to the pandemic. They were also supposed to check and confirm whether KEMSA had adhered to the Public Finance Management Act in the procurement of medical supplies. And then lastly, they were also supposed to check and confirm whether there was value for money in the procurement of medical supplies that was done by KEMSA. So just as I had said, we have specific terms that are supposed to look at or inquire into an organization-specific utilization. So those were the main things that the three committees wanted the OAG to confirm. And then in line with Article 229 of the Constitution that lays out the overall objective, the mandate of the OAG, that is, the specific objective of this special audit was to confirm whether now the public funds were utilized in a manner that is lawful and effective. So for each of those specific terms of reference, and I'll tie this shortly to this summary of findings that we see here. This special audit was required to review the budgeting and financing processes at KEMSA, to establish the expenditures incurred by KEMSA, including accountability for all the donations that had been done, and also to review the various procurement processes. And in line with those requirements, they then conducted, the OAG then conducted that audit, and these were the findings. First, there was irregular utilization of the universal health coverage, or that's the UHC, and capital budget for to fund the COVID-19 related procurements. So here, the audit basically just established that KEMSA had various sources of funding for COVID-19 related spending for the period of this report. That's March to end of June. And what they found was that there had been irregular utilization of these funds, and the funds were not utilized to achieve the specific objectives that are set out for the funds. And more detail regarding the irregularities are provided in the report, and also in our draft analysis, which we will be able to share with you. Then the second overall finding was that there was irregular use of retrospective direct procurement method. This was a major one, and the OAG went on to provide a lot of detail around it. So basically, the audit established that the KEMSA used direct procurement method to source for COVID-19 related items, and it did not follow the requisite procedures. We know that it is not always illegal to use a direct procurement method. However, due to the risks that the risks that are attributable to the use of this method, there are very specific requirements that one or any institution or person that would like to use this method of procurement has to adhere to. So for this in this specific instance, it was found that there was a blatant or gross breach to the requirements that are spelled out for direct procurement. So Section 103 and 104 of the Public Procurement and Asset Disposal Act usually highlights what can be done, what must be adhered to before you use direct procurement. So first of all, there is in situations where there's certain urgency or emergency, direct procurement can be used. We all know that the pandemic obviously was provided a situation of emergency. So if properly used, then this could have qualified as one of the instances where direct procurement could be used. But that was not the case, as I continue to explain. And then direct procurement can also only be done if the acquisition price of the goods or the services that are being procured is fair and reasonable and compares well with known prices of, that's the market price. So it should compare well with the known prices of goods and services. So the special audit found that there was no market survey that was done to form a basis for price negotiations. And in fact, some commitment letters were issued only indicating volumes, and these were issued even before the commitment letters were issued even before the actual procurement began. So then the act, the PPADA also provides that the purpose of the direct procurement should never be to avoid competition, and appropriate approvals usually should be sought before using the method. So the Act provides that all the accounting officers that are responsible for procurement should ensure compliance with the Act, and this was not the case for this specific instance. So looking at this specific violation, the audit established that KEMSA commenced procurement of COVID-19 related items using retrospective direct procurement, and they had not put in place any systems and procedures to guide the use of the retrospective direct procurement. So it was therefore established that for these reasons, around over 8 billion was irregularly procured using this method and the non-adherence to the laws. Then the second one was commencing COVID-19 related procurement processes without approved budgets. So this was another major or significant finding by the OAG. So basically they were saying that the institution undertook procurement of goods without ascertaining, without having an approved budget for it. So commitment letters were issued and no budget had, the budgetary allocation had not been confirmed, and the commitment letters were amounting to over 7.7 billion, and this is also a breach of the Public Procurement and Assets Disposal Act and also a breach of the PFM Act. So the Procurement Act requires all accounting officers to ensure not to commence any procurement until they are satisfied that they have sufficient funds to meet the obligations of the contracts that they are about to issue. They did not, the KEMSA did not have this. And then the PFM Act under Section 43B also provides this, and specifically the regulations, the PFM regulations provide that accounting officers are required to ensure public funds are utilized only for the purposes that they were appropriated. So if you go ahead and make a procurement plan without a matching budgetary allocations, that means the funds had not been demarcated to meet those objectives, which is a violation of the law. Then the fourth thing was the failure to integrate COVID-19 related procurement plans to the budget process. So first of all, we've seen there was no allocation. Then even after even subsequently, there was failure to integrate this procurement plan to the actual budget process. So, excuse me. So this special audit found that specifically the CEO of the KEMSA approved a procurement plan that was to the tune of over 5 billion, and this was to be funded using the KEMSA capital budget, and the amount was higher than what was available within the capital budget. And then again, as I've mentioned, though, the procurement plan indicated that the procurements were to be funded by the KEMSA capital budget. They did not have an approved budget allocation for COVID-19 related procurements. And the violations here again were amounting to over 5 billion. This is clearly a violation to the two acts that I keep referring to. As we know, Section 53 also, just to reiterate, of the Procurement Act requires procurement and asset planning to be based on indicative or approved budgets, which should be integrated with the applicable budget process, and this was not done. So that's the fourth. Then the fifth high-level violation that was identified by the Office of the Auditor-General was inefficient stock management procedures at the KEMSA. So here what they meant was, what the audit found was that it was established that goods worth the total acquisition value of about 7.6 billion goods had been acquired, and then these goods were not utilized, or they were lying at the KEMSA warehouses and they had not been utilized. So despite the fact that this KEMSA had procured these goods on the basis of urgency, they had said that it's emergency spending, so they had used direct procurement, claiming that it was very, they required these items. Most of these were those medical supplies, the masks, and so on and so forth. They were acquired through direct procurement. However, they were lying in the warehouses during the period of review and had not been utilized. So this obviously shows that there was no proper or efficient management of the stock that had been acquired by the KEMSA. So just in terms of more specifics, out of the stock that had been acquired at a value of about 7.6 billion, an amount of around 4.7 billion had been paid, and the balance had not been paid due to a lack of funds. However, the Auditor-General could not find any indication or any justification for procuring the items on the basis of urgency, and the stock, it was found that these items would possibly remain in those warehouses until their expiry, because later on it was established that they could not, the items were not required or were not as urgently required as KEMSA had claimed. Then the fifth, in terms of the fifth violation, was red flags indicating procurement fraud. And these are the words of the Auditor-General. So in terms of their summary, they had specifically said that there were certain red flags to the transactions that were done by KEMSA, which by themselves would have been an indication that procurement fraud is likely to occur or actually occurred. So the red flags, if I may go to specifics, is that here it was established that there were certain companies that had been established just months before the specific contracts to supply the COVID-19 related items were awarded. So the auditor is saying that given the time of existence of these companies, it is very sinister that they were awarded such huge amounts of contracts. So their ability basically to supply the equipment and the products that were necessary to respond to this was called to question, because these are small companies that had been established very close to the time these contracts were issued, and so it was doubtful whether these were genuine companies or there was some attempt to cause some undertake some fraudulent activities. So the report highlighted 3 specific contracts that had been established just months, some as soon as 2 or 3 months before the contracts were issued. And the OAG basically questioned the qualification for these companies to supply the specialized medical equipment and the products. So in sum, regarding this specific violation, it was established that there had been no evidence that the initiation of the procurement process for these items was triggered by any real need assessment, just also to establish the demand for the products. So it was found that the initiation of the procurement process without planning and budgeting, as I had stated earlier, the use of direct procurement in disguise of urgency, and items laying around for as long as 6 months, all these were found to be red flags, indicating a problem with the entire procurement system. Then the last one was the case of overpricing items by suppliers. And here the audit report basically found there was a peculiar case where a certain company was supposed to supply surgical face masks, just the normal masks that we use against the COVID. So this company had provided a letter of intent to supply the masks at 95 shillings a piece early in April of 2020. Then the face masks were received at KEMSA on the second day. As soon as the letter was received, the face masks were received. Then again, on the same day, a letter was received by KEMSA from these companies, and they were stating that. So at first, they had provided that they were going to supply the masks at a cost of 47.50, at a cost of 3,000. Sorry, they had indicated that they were going to supply the masks at a cost of 3,000, and then the prices were dubiously revised thereafter, and it could not be ascertained why. Even though they had received an initial letter of intent indicating that they would supply the masks at a lower price, the evaluation committee met later and decided to award them that contract, but at a higher price. So that was a very obvious, clear case, or where it could not be ascertained why items were overpriced, even though there was all indication that initially the very same items could have been supplied at a much lower amount. So that's the high-level summary of that report. Going to the next slide. So now most of this we'll still talk about. So the report then goes to disaggregate the violations in terms of the violations that were specific to the Public Procurement and Disposal Act, and then violations to the ones that are attributable to managerial responsibility. So these are more or further violations to the Public Procurement and Disposal Act that were identified. So I've already spoken about the first there, which is the failure to conduct the market survey for the items procured. You can see the amount. And then on the last column, we have the very specific law or regulation that was violated. So I will not go through each of them individually. That's the first. Then the second one, we had a failure to test samples by the Quality Assurance Department before the issuance of commitment letters. So that's that should be for all the amounts, basically for all the contracts that were issued. The fact that there was no quality assurance that was conducted, that was a violation of their own systems and processes. So we have the internal memo there that was violated. Then we had irregular extension of delivery times for some of the contracts. You can see that the amount in question there was around over 600 million. And then this is in relation to the Public Procurement Act. Then we had delivery of products past agreed timelines without approval. Again, you can see the amount was 220 million. Then we had, for an amount of 871 million, we had 5 irregularities. And the first was the engagement in business for which supply is not incorporated for. So we have companies that are set up, or suppliers who have a specific mandate, but then they are supplying completely different items, which again is a red flag and may be indicative of the likelihood of fraud. Then we have suppliers being financially incapable to execute contracts, directors are technically incapable and inexperienced to supply medical commodities. And on the third column, you can see these are all tied to violation of various laws. So those that are indicated there. Then engaging of unqualified suppliers. So the auditor determined that these were all irregularities, and they were specific regularities to the Public Procurement and Disposal Act. The next, we had the irregularities or the audit queries that relate to managerial responsibility. Next. So in this particular instance, the special audit also had disaggregated all the audit queries that could be directly attributable or to managerial responsibility. So we have, again, the irregularity on the first column. Then here we have the law that was violated or the various risks, and then the amount that could have been at risk of either misappropriation or fraud, or for which taxpayers did not receive value for money. So the first was the utilization of the UHC, Universal Health Coverage, and the capital budget to fund COVID-19 related procurements without authority. You can see that against the PFM Act. Irregular use of some of these are both violations to the Public Procurement Act I've stated before, but there are also queries relating to managerial responsibility. So the second is the irregular use of retrospective direct procurement. And then the one I talked about commencing or undertaking COVID-19 procurement processes without approved budgets. That's against Section 53 of the PPDA. And then the failure to integrate COVID-19 related procurement plans to the budget process. Then the inefficient stock management procedures that I talked about, exposing cancer to value for money risk. And this is not only exposing cancer, it's also exposing the public basically to no value for money, because this is taxpayers' money. Then we have failure to ensure procurements under KEMSA capital budget were guided by adequate market forecasting. That's against the PFM Act. Then the awarding of tenders to companies that had been in existence for less than 1 year. So these are risks and red flags for procurement fraud. So that was, in summary, there's a lot more detail if you read the OAG report itself. And in our own summary analysis, we have draft reports where we undertook this analysis ourselves and we provide more detail. But in summary, those were the main audit queries that were found. And the key messages here that from our interpretation, what we see as the running thread, the running trends here was that first there's obvious blatant or gross violation to the laws. That's the Public Procurement and Disposal Act, blatant disregard or non-adherence to the Public Finance Management Act. And this is both by the procuring entity here, who was KEMSA, and also a bit of the blame also on the suppliers, who in some instances seem to collude rather with the KEMSA. So we have that disregard for the law. And then the other issue is the no value for money. So when you talk about the auditor questioning the value for money for procurements worth over 8 billion, that basically means that it is questionable whether the taxpayers were actually able to receive any value for money for that same amount, basically. So we know that the PFM Act and the regulations thereunder specifically provide that accounting officers are required to ensure that all processes and procedures are done are put in place to ensure effective, the three E's of value for money. That's to ensure effectiveness, to ensure that the processes are efficient, and to ensure it's some economical and transparent use of public funds. So there's clear violation of those three. And when my colleague Leo will be discussing the recommendations, he will talk about then what should be done, because those are our key findings for that. Then very quickly, I move next to, that's the summary of the first report. Next, I move to the summary of the Special Audit Report on the utilization of funds, COVID-19 funds by the national government. So we've dealt with the Special Audit Report by KEMSA, but then, as Kwame had mentioned earlier, there was also a distinct special audit that was carried out to check the lawfulness of expenditures by the Ministry of Health, the national government here being the Ministry of Health, and also the referral hospitals, just pending at the national level, because Leo will talk about the special audit for counties. So here for this particular one, the objective for this I've already mentioned, but looking at it was not followed by a specific request by any of the committees, like I mentioned earlier for the KEMSA one, but this one is just in line with the Auditor-General's mandate. So part of the mandate as prescribed by the Constitution and the Public Audit Act, the OAG may actually initiate or undertake a special audit where they also suspect that there may be some irregularities, the likelihood of irregularities to occur. So looking at the specific terms of reference for this, the OAG sought to review the utilization of COVID funds by the National Treasury, the Ministry of Health, and other departments and agencies, and referral hospitals. And then to check also for the utilization of funds by the COVID-19 Emergency Response Fund. You all remember that fund that was set up. So the terms of reference was to check all those expenditures by those entities. Then we go to the key findings. In terms of key finding, the first here that there was inadequate controls, and we start with the Ministry of Health. So these were the key findings for the Ministry of Health established by the audit. So that there was inadequate controls in the management of fuel, and that was amounting to around 14 million. And here, basically, it was established that there was a company that was awarded a tender to supply the delivery of fuel worth that amount. The ministry made an advance payment to this company, but the special audit basically established that there were certain weaknesses in terms of the utility or the usage of the fuel cards that were provided or that were designated to ensure utilization of these funds. So the cards that were issued to facilitate the fueling of each of the vehicles by the Ministry of Health, they were not actually aligned to any specific vehicle. So it was not easy or possible to track the amount of utility by the vehicles that were assigned to the Ministry of Health. So the audit basically stated that it was not possible to ascertain the amount of fuel that was consumed by each of the vehicles. So it is not even possible to state whether really the 14 million was used for fuel consumption, because they could not trace which car used what. So looking at the documents that were provided to the Auditor-General, when it comes to matching the amount, the fuel utility to a vehicle, it was just marked as any vehicle. So there was no specific registration numbers issued. It was just improper records to actually allow for tracking of the utilization of that fuel. Then the second one, there was an unexplained variance in the payment of import duty. So here, the query related to certain goods. There's a specific program, the Transform Health System Universal Care Project for COVID-19 response, that this program was receiving monies through UNICEF. And so there were certain imports that were supposed to be done, but there was having reviewed the documents, it was clear that there was an unexplained variance in terms of the amounts of money that were paid for the import duty. So the review of the documents showed an overpayment. Looking at what had been indicated as the import duty initially was supposed to be 5.9 billion. So the required import duty for those specific goods that were coming in was supposed to be 5.9 billion, but the Ministry of Health paid 6.6 million. So the extra 700 million that was paid, it could not be ascertained by this audit why the variance or why they paid more than what was required. That's the second. Then third, we had the issuance of a local service order after provision of services. So, I mean, I think it's bizarre that the ministry could go ahead and procure for certain services, make payments, and then subsequently issue the LSO after after the services have already been issued. And this was for a cafe that was engaged, a certain cafe that was engaged by the Ministry of Health just for catering services. This was service to provide, I believe, food for the COVID-19 response teams that had been established. So the cafe was supposed to provide food, I think about 1.5 million. However, after this, the performance of the contract is when this LSO was issued. And so obviously the Office of the Auditor-General flagged it as an irregularity because we have, in terms of the proper procurement system, issuing of LSOs cannot follow performance of or execution of the contract. Then the fourth finding was regarding unsupported expenditure for airtime. And this was basically regarding some airtime that they had engaged, the ministry had engaged Safaricom to provide airtime or scratch cards worth 2.4 million. And this airtime was issued without any requisition. No requisitions was done. There were also no vouchers for this. So while just about less than $1 million of this was signed for by the specific recipients of the airtime were able to sign, about airtime worth over 2 million, there was no signature for receipt, there was no requisition for it. So again, the special audit just said that they were unable to confirm or they could not find evidence for who the recipients were or if at all this airtime was issued. So that was the query. And then fifth, we had an audit query relating to unsurrendered interests. And here the audit basically established that there was unsurrendered interest of 7.9 million. That's as at 30th September 2020. No reason was attributed to why, or it was just, that was just the finding by the ministry. Then lastly, we had a query relating to delivery of ventilators to counties that did not have the capacity to utilize these ventilators. So by the time of the audit, by the time this audit was carried out, the ventilators were still in their original packaging. And you can see specific examples there listed for the facilities that received ventilators but did not have any capacity. Next, I go to audit queries relating to referral hospitals. And this is also just a high-level summary because of time, but we will find more detail in our reports. So we have the specific referral hospital. The report provides in detail what the issue was, but we summarized it here as such that for the Coast General Hospital, the audit query related to goods, failure to inspect purchased goods. So goods were supplied, there was no inspection undertaken. And I mean, some of the reason for insisting for goods to be inspected obviously has to do with value for money, to ascertain that the goods are in proper order. But when you purchase goods and this is not done, it calls to question the reason or if at all the necessity for these goods and if the procurement was just done for the sake of it. Then for Kitui Referral Hospital, we had irregular transfer of funds from the hospital account to the Kitui County COVID account. Then for the Mandera Referral Hospital, we had procurement done without evidence of professional opinion, and the amount there is over 200 million. We had inappropriate use of procurement method and absence of documents to support the opening and close and evaluation of the bids. Then for the Kenyatta National Hospital, the main audit queries are related to the absence of work plans on utilization of the funds. We had queries relating to over expenditure on recruitment of additional health workers. So their reasons for this were not provided for the over expenditure. And then we had delay in delivery of equipment, which then negated the justification for direct procurement. So again, as I had stated earlier, when you call for direct procurement, you need to demonstrate that there was serious urgency or emergency that requires this. So if you call for direct procurement and then you do not utilize the goods, or the goods are laying around months after the direct procurement, then it's obviously a red flag. Then for the Kenyatta University Teaching and Referral Hospital, we had payment for expenditures incurred before COVID-19 was declared as an emergency. So they're calling this COVID-19 spending, but the payment was done even before the pandemic was declared. Then delivery notes dated before the tender opening, services offered before awarding of the tenders, and failure to include an estimate of non-cash donations. Then lastly, we had the Moi Teaching and Referral Hospital. The main audit queries there were an absence of approved work plans, budgets, procurement plans. So this is basically gross violation of the proper procurement system, in summary. Then irregular payments of health workers and unaccounted for funds. As I conclude, I restate the key findings. And here are the key findings for looking at the utilization of funds by the Ministry of Health as well as the referral hospital. We see again a trend of consistent irregularities or blatant violation of the law in utilization of the funds. So yeah, we have non-adherence to financial regulations, and consequently, the auditor could not, through this special audit, confirm value for money. Their mandate is to confirm that public funds are utilized in a manner that is lawful and in a manner that is effective, so that the taxpayer can receive the ultimate value, the optimal value for every shilling spent. And from what we see here, that cannot be ascertained for this emergency spending. So thank you very much. I conclude the first two reports. Leo or Kwame?
Leo, go ahead. Since you have some very strict time left, please go ahead.
Okay, so I'm going to discuss the special audit of the Auditor-General on utilization of funds by county governments. So just to follow the same trend, for what Jackie has already discussed, we're going to look into the summary of findings. And it's very, one of the things that is just like for the national government, the counties do not also have work plans, procurement plans, and training plans that are specific to COVID-19. There was the delay in utilization of funds, so that had already been set aside for COVID within counties, and this exposes raises the issues of value for money risks and the vulnerability to COVID-19 risks, and then of course the non-adherence to Public Procurement and Asset Disposal Act, various issues including a procurement of goods without valid contracts, and then the inefficient inventory system. And then another serious issue that was raised is the discrepancies of what dispatch records at KEMSA and receipts at county governments on donation. So these are goods left KEMSA. The record showed the records that when goods arrived at county, there were discrepancies of what was what left KEMSA and what was received at counties. And then failure to include estimates of non-cash donations in the budget, because the law requires estimation and then to the calculation of the estimate, and then that would be reflected in the budget. So in summary, what are audit queries that were observed across all 47 counties? All of them did procurements without market survey. And this is a serious red flag that indicates a procurement fraud, because unless there's no way to confirm at that time the market prices for those, aside for what counties bought, aside from it being a requirement of the law. Second issue is to failure to include the estimates of non-cash donations in the budget, because part of the accountability of that non-cash donations is to be able to, for it to reflect that this was what was given to counties, and this is what was received, and this is what was this is how this is, and it reflects in the budget, and now it is used subsequently. So summary of, so this is what we applied as a small tool to show frequency and to show what was the most what are the most serious issues that the Auditor-General raised for county governments. So if you look, for example, some of those, most of the counties share. So the first column shows queries, and then the second, the risk and law violated, and then the third column shows the share of counties. So if you look at the third column, most counties delayed in utilization of the NIDA funds, and this could be tied back to stringent measures, accountability measures that are required before those funds are spent. Another thing, most counties do not have work plans, procurement plans, and 77% of all 47 counties do not have that. Another issue is the absence of approved procurement plans. 70% of those counties do not get that. So this is to give a flavor of how prevalent some of these audit queries in across all the counties. So this is for me what I think shows the serious risk that the public finance management system faces. What are the key messages? So one of the things is because the biggest complaint that the Auditor-General raised is that the county, there were no approvals. So county legislatures should come up with, should adopt mechanisms for scrutinizing and approving emergency expenditure items. Because what happened was, like, when there was a cessation of movement and the the legislative function was suspended, was like suspended in essence, but spending continued throughout that period. And that could be one of the things. So we can even amend the standing orders to even allow approvals, even at night or any time of the day or any time of the week. And I think that even if county legislators wanted to sit down, they would have done the same. Another thing is the automation of stock management systems, because inventories, the serious issues raised, whether it's what was received at county by other donors, by KEMSA, and the movement of the same. And then the third issue, internal mechanisms to identify red flags. So institute internal mechanisms to identify red flags, and how these red flags again go back to the oversight agencies, because it should not end at identification, but move ahead to of oversight agencies. Then there is a question of enforcement, which is to punish all those responsible. And this should be an administrative function, either by the governor and subsequently with the county assembly. So what are our recommendations? Aside from punishment of, because the Auditor General, like for example, the case of KEMSA has already put the managerial, what the managerial responsibility. So it's the punishment. The law should follow its course, because here it's a question about deterrence, and where things are not clear, especially following now the money, where the money has gone, further investigations by oversight bodies. And then for KEMSA, complete overhaul of the business model to ensure that value for money. And then, of course, we also know that there's a bill to allow counties to be able to source for their pharmaceutical supplies outside KEMSA, the KEMSA model. Then 3, accelerated speedy case resolution. And I think this is for law enforcement. The objective here is for law enforcement to go after persons who've violated. There are these low-hanging fruits, like the issues of procurement, that are very pervasive, and they can easily prove that there's negligence. And then to be able to, because Kenyans need to move ahead of this. And then, of course, appropriate actions for persons found culpable. In conclusion, before I end, it's just to say that for here, the public finance management system and the public procurement system is clear what should have been done. So here, the growing concern, and the most important of them, is enforcement. And now, what to do, how to build on that and get an early warning system to be able to prevent such from happening again. So thank you so much. I end there. Back to you, Kwame.
All right, thanks, Jackie and Leo. So let me try and just say 3 things about it. First, these are 3 specific audits. One is a special audit on utilization of COVID-19 funds by KEMSA, Kenya Medical Supplies Authority, and that's for the period 13th March to 31st of July 2020. And then the second is the report on special audit on utilization of COVID funds by the national government. So that's national government. So one is a specific government agency, or a parastatal as we call it. The second is national government expenditure. And then the third is a special audit by the Office of the Auditor-General on utilization of COVID funds by county government. So there's one at the county government level, national government level, and obviously a parastatal. And of course, there are differences that are peculiar to the roles that they perform, but you can see some common things. Among them is that the utilization of funds and the failure to meet value for money requirements and lawful expenditure involves both very large sums, billions of shillings, and hundreds of thousands of shillings. So obviously, it's a suggestion that it's not necessarily about the amount of money. Of course, the amount of money would show, but it's suggesting to us that when the audits are conducted, usually it reveals very troubling things about procurement in general. And when you have an emergency such as this, and more money going in, then those weaknesses in the procurement infrastructure are replicated, because are replicated at the national government, at state corporation level, and obviously at the county government level. So that's a first. The second one is that basically most of these are errors, and those errors are not necessarily accidental. They're very systemic. If I may mention, for instance, there's a requirement for stock management. So inefficient stock management, say at KEMSA, there are red flags indicating procurement fraud. There's a failure to actually inspect goods. There's a failure to test for quality assurance of goods and all that. So it looks like procurement is being done as an end in itself and not necessarily to meet the needs. In this case, obviously focusing on COVID-19 and the response that government wanted to. So it's clear that a lot of money, and public money especially, and resources go into this. But the infrastructure for public finance, for procurement as part of the public finance management system is leaking, whether we talk about it at county government levels, and if you talk about county government levels, or rather even at the national government levels, national government conducts procurement, provides ventilators, which, as you remember, in 2019 and in 2020 and 2021 was seriously required, but they were bought. By the time the Auditor-General's office went in to conduct the audit, it was found that many of these, or for some, I think about 6 or 7 counties, still had the equipment, valuable as they were and life-saving as they were intended to be, still parked. One, because procurement was conducted without a confirmation that there was need to that expenditure or that product was actually available for use in that specific place. So it's one thing to buy goods, but it's another to find out whether it will be used. So it's possible that as we see today, some of those ventilators might still have been required. I mean, might still be in mint condition by virtue of the fact that they haven't been opened, there was no space, and perhaps the facility was not available to its use. So this disconnection in the public procurement, where a procurement plan in some cases did not exist, sometimes procurement was done, and then obviously local purchase orders were actually supplied after that has been done, suggesting that there's a significant errors, if you may call them that, but some of them obviously are all trending towards leading to inappropriate use of public money and payments being made in huge places. The qualification of tenderers as well. I think one of the things government tenders tend to do is, one, when the tenders are issued, there's a requirement for a very good performance record. And so when you find out that some of the people who were brought in had records that did not match what was required for them to actually competently perform, suggests all that is this. So in all, it's not a good story for COVID. I think I might also say, this has not been said by my colleagues, but it might also say that some of these errors probably led to unnecessary suffering, possibly even fatalities, because if equipment was not made available, if it was not the right equipment, if you overpaid for it, it means that the quantity that was supplied was much less than what could have been available if the products had been provided at a more competitive price. So we see all those things. And what I'd like us to note again is that it's at all levels, basically a weakness in the public procurement system, especially with audit, suggests that the use of public money is suboptimal, both at state corporations levels, here we are talking about KEMSA as a case study, at county government levels and at national government levels. So basically, all these institutions or all these levels of public expenditure represent an equal opportunity for procurement to go wrong. We have a few suggestions, some of them dealing with strengthening offices, oversight, real-time monitoring, and ensuring that public money is. But I mean, I think it's a sad story. It's good for us to actually confront it, but it's a sad story about when you have a complex illness or a complex crisis, which is why government exists, and especially in healthcare, where all Kenyans tend to agree that government has a big role. And then we see these systematic failures leading to loss of money. Of course, maybe some violations will result in prosecution, but we have very little confidence that we have a public procurement or management system at all levels of government that serves public purposes, at least as shown by these case studies. So thanks, Jackie, and thanks, Leo. I'll open this conversation now because I haven't seen specific questions, but I'll open this conversation now to any of you. Please raise your hand. As soon as I see it, I'll call your name and then you'll have an opportunity to ask questions. I think we have maybe a number of, actually just 6 more minutes, but I'll stretch that by 10. So we have 16 minutes. If you please, let's have your questions. I also need to confirm that the reports are available on the IEA's website. I think the presentation will be edited. I saw a few typos here and there. As soon as it's edited, it will be circulated today in the afternoon as soon as this meeting is over. So all that will be available for your further reading. But please let me have any conversation, any reactions that you might have or questions that you might have to Jackie and Leo. Anyone? Anyone with comments? All right. It looks like we do not have any comments. Let me keep it here again. Let me just try and ask about, let me ask Jackie and Leo. I think one of the things that I've seen, and I've seen in all your recommendations and the key messages and the recommendations, I am concerned that most of your recommendations are about after the fact procurement, fixing the procurement system after errors are detected. It might be because obviously the primary content, the primary source of the information that we have here are audit reports. But what suggestions might you have about ensuring that public procurement or these audit reports, the content of these audit reports help to reinforce the procurement system all while this is happening? Because I think the reliance on Auditor-General's reports is important, but it's clear to me that it doesn't solve the entire problem. That's one. Secondly, what does it tell us about any emergency, what we do about the emergency situations such as this in the future? What might we watch for, and what might Parliament and all those institutions, or in those roles, do differently to ensure that we don't have such a sorry state? Because we have, as COVID has confirmed to us, we might have to live with. Of course, it's they say it's 1 in a century problem, but I think all this is an opportunity for us to ensure that the entire system of public expenditure, especially in health or in other sectors, is strengthened so that these shocks, when they require the greatest efficiency, they require robustness in public procurement, and they require robustness in all spending, are not overwhelmed, as it looks like the COVID-19 emergency did. So I don't know who goes first. Should we start with you, Leo?
So one of the things it's true that our focus on recommendations was after the fact, because these are the audit and specific to COVID-19 funds that we want to see action around these specific facts. But on a broader, the broader issue of procurement, it's enforcement and the adherence to the law, because here people skipped steps, avoided the law, and generally the spending that was done during that time, as confirmed by the Auditor-General, was not consistent with. So it's an issue of enforcement. How do we know that these errors that are not accidental are going on, and to be able to deal with that issue? And even the issue of approval, because while we know that for example, for the issue of counties and the issue of the cancer, part of that, all those resources that were spent without approval, how do we ensure that because it's the issue of enforcement, it goes back to the same question, enforcement, which is members of county assembly and members of National Assembly have to stand up and pass that resolution that any accounting officer, even though this is provided within the law, who spends with no authorization should face like this jail term, or be sanctioned like this, that these sanctions are automatic, that the failure to spending without approval triggers automatically another course of action for the part of the accounting officer, because this problem is countrywide. If we were to simulate, it will touch almost head of legally, that the failure in action, the inaction or omission would touch almost all those accounting officers. So this is a serious issue, and for me, it goes back to the issue of enforcement and doing that timely enforcement, because we still have the early warning system. The early warning system now is supposed to be the internal auditor who will raise these issues, but now the utility of those reports, because it all still ends up at the management. Perhaps now it's a better question to ask ourselves whether the County Government Act, the section on the internal requiring an internal auditor, should be expanded, that these utility reports, should be made public. So that is my question, my answer to your first question. So maybe perhaps Jackie can deal with the rest. Thank you.
Okay, thank you. Thanks for the two questions. So the first, just to add to what Liu has said, so the first question talked about that most of our recommendations are after the fact, are responses to sort of fix the consequences after the fact or after the violation has occurred. So what would we propose? I would think that because it is established and most stakeholders agree, most players in the public sector, in the procurement market, most people agree that the regulatory framework for public procurement, we have a very comprehensive, very robust public procurement system in terms of regulation. We also have quite a number of institutions tasked with the oversight. And so we are not lacking for laws or institutions. And that's why it actually seems easier to go back and propose recommendations in terms of the institutions that are able to oversight or enforce or follow up on the enforcement, as my colleague Liu has said. I think there is need for more stringent consequences for violations at every stage, so that we are not only waiting for after the entire expenditure has been done and then audits have confirmed the unlawfulness and ineffectiveness of the expenditure, then that's when we have responses. If we could have a way, I don't know whether that would require some review of the law, but just to ensure that we have more stringent responses to violations that occur right from the very pre-tendering stage, right from the very first initial stages of the public procurement system. So if we have those red flags that the Auditor-General claims, red flags that all stakeholders can agree on, I think once violations have been established, then we should have some sort of consequences, either for the accounting officers or for all the persons that are in breach, right from the start. There's also need for a clear early warning system to be put in place for all procuring entities, for the use of procuring, to be used by procuring entities, to be used by oversight agencies, to be used by the public, the media, so that we have the Public Procurement Information Portal, which houses all government contracts. So if we can already, if all the stakeholders can already identify red flags to the various contracts, then we need to have an early warning system which identifies that this contract is likely to be problematic, and then it will allow for alarm raising right from the onset, so that we are not waiting for it to translate to losses in terms of billions of shillings of taxpayers' money. We are able to nip it right from the beginning if we had an early warning system. And I think that is something that various institutions, including the IEA, can work on. And then I think the other issue is looking at the controls that all the procuring entities and government agencies have. So the internal controls, some seem to be weak, so there's need for a proper overhaul. overhaul or strengthening of what appears to be weak control systems, so that we're able to prevent the massive losses that or misappropriation that we've seen. And then on the last one is the deterrence element. Now, I know that one we're talking about, that's a recommendation after the fact, because once the law has taken its course and accused culpable persons are found guilty and the sentences are meted, but we hope that the sentences can be so severe and dire that they can serve as a deterrence in future for any persons intending to commit procurement fraud. So that's the first question. So that would be my response. And then the second one would, you've asked, what do we learn from this, from the special audits that have been conducted so far? What do we see about emergency spending, or what does it tell us about emergency expenditure? So I would say the very first obvious one is that these special audit reports have illustrated to us that the emergency spending is obviously prone to more risks at a greater scale because there are certain exceptions that are allowed for it. The law allows for it, but lack of adherence to the law actually exposes the system to more risks. So I think it tells us that we need to be more vigilant in future in case we have any other pandemic or any other emergency that will require a response that requires a lot of resources. I think we need to be more vigilant. So I think Kwame also mentioned the real-time monitoring. So just putting in place more stringent monitoring mechanisms to ensure that we are not waiting again after all the spending has been done to find out what violations took place. So given the fact that it's exposed to more risk, so then it means that there's need for more or higher level monitoring, and there's also need for more controls. And maybe we need to strengthen the controls that are in place to regulate the emergency spending. So as we have it so far, the regulation around it is not has not served its purpose as it should. So maybe we need to also interrogate that and see what might need to be tightened to make it more responsive in future. Thanks.
All right, thanks for the answers, Jackie and Leo. We have one other question. We have one other question from Itoto. It's on the chat box, and she said, should there be guidelines issued for procurement in the event of crisis? I think Jackie has dealt with a little bit of that, but you could respond to it as well. I see no other questions, and because we are 9 minutes ahead of, beyond the time that we agreed to state this, I'll ask you both to respond to that. So again, I'll start with you, Leo, and then Jackie, you can finish up in addition to answering Itoto's questions.
Yeah, so I think there should be guidelines issued for what should happen in times of emergency spending. But already it's not the absence of guidelines, because the way the procurement law has been crafted at present is that it allows it foresees this kind of crises. The only problem is that during COVID, when COVID first happened, and there was a lot of the expenditures are so sporadic, and they were so sporadic, and so and it's huge expenditures relative to the normal. The accounting officers looked the other way to the law. So the law is there. If you read it's there. But should there be guidelines on what needs to be done for specificity purposes? Maybe so. So, so in conclusion, because you've asked us to respond and conclude, for me, what I think, looking at the 3 special audit reports, is that primarily this is a question of enforcement. And going forward, how institutions which are tasked within the PFM architecture to undertake enforcement, to undertake oversight, and to provide those checks and balances in how resources are spent, is something that people that they need to stand up to, because that is it's like a wheel, and that's the wheel that failed, because unless they were able to stand up to those to the accounting institutions, to the accounting officers, it's very difficult to stop this kind of errors. And lastly, it's clear the value for money issue has never been understood broadly, both by or understood but ignored, both by accounting officers and also institutions that are meant to provide checks and balances. Because if the ventilator in, for example, the metropolitan area like Nairobi needed so many ventilators, there was a problem of oxygen, people were looking for those specific places, the prices went up. But in other places, there were ventilators that were never even opened. It shows that the nuance, the part of the economic plan, that part, the economics of healthcare, and now the efficiency at facility level is something that, if the efficiency at facilities on facility level and also at macro level is something that most institutions, accounting officers, and people who are supposed to ensure that this happens, never did so. So it shows the dysfunctional, the dysfunction, the leaking part of our public finance management pipe, and the dysfunction in the healthcare system converged together. And that is something that needs to be watched carefully, because it's not a coincidence. The same thing happened with MES, the medical equipment scheme. You can easily see that this is one of the sectors that has faced a larger part of that faces significant problems. So we have both a dysfunctional healthcare system and a leaking PFM system, which together, when converged, it forms a very serious risk. So it's a good thing that Kenya never witnessed the side of pandemic that, for example, Italy did, because this would have gone badly. And so that's my comments. That convergence is something that needs to be watched. Thank you so much.
Thank you. Thank you, and thanks, Leo. So just to add and conclude, so in response to Itoto's question, I agree with what Leo has said, that, I mean, yes, we do have a comprehensive regulatory framework, but perhaps we do need, I think we do need guidelines that are more specific to help us because we never know the next time we will have a future emergency. It could happen anytime, and I think if we are prepared for it, by now that we have seen what risks have been exposed by the current emergency, then we can be able to use that to draw up guidelines, and specifically the guidelines should be able to illustrate what areas are red flags. So when dealing with emergency expenditures, what should be termed, or what should be deemed as, what are some of the indicators or risk factors or red flags, and how can we avoid that? So I think we so yeah, basically, Toto, I think, yes, we should have additional guidelines that are more specific, but also keen enforcement of what we already have, because we've been stating here continuously that we do not lack laws. If we had even implemented what we had to the letter, then most of it, I mean, there are certain areas that may require guidelines, but if we had implemented the law that we have as is, then most of the queries that we see are emerging would not have been queries in the first place. So that would be my response to that. And then to conclude, I would just add by saying that tackling procurement fraud, I mean, these special audits have discussed broadly. They have significant findings on procurement fraud, but I think that tackling the issue of procurement fraud requires the response of different agencies. So it's it requires a multi-agency sort of response. So we need to have all the procuring entities, that's all the government entities implementing what is required of them by the law. Then we also need to have the oversight agencies playing their role more effectively. And that's all of them, right from the Public Procurement Regulatory Authority, the Ethics and Anti-Corruption Commission, Parliament, the Office of the Auditor-General, which, to be fair, has in my view, has been doing the most in terms of actually following up and providing these reports to us. But for the other oversight agencies, I think a lot more needs to be done. The DCI, the judiciary, in terms of the speedy resolution of the cases that ensue, and so on and so forth. So basically, there's a need for proper coordination by all these agencies to ensure there is a coordinated response to the violations that we see, and so that it's also preventive in future. So that would be what I would say. And also, there's need for us to learn from the findings that these special audits have exposed, and see how we can improve the systems, the controls and the systems that are there in place. So thank you very much. And we'll have the presentation available after this on the website. Thanks, Kwame.
All right, thanks a lot. I think I'll conclude with this. Leo has mentioned that one of the things that we've seen is this analysis that has been conducted by the IEA. And remember, it's three separate analyses. One is on the Special Audit Report on the utilization of COVID-19 funds by the Kenya Medical Supplies Authority, which is a parastatal. The second is an audit audit report on utilization of funds by national governments. And then the third is the same audit of utilization of funds by county governments. And the stories obviously are linked in some way. What they tell you is that there are weaknesses that are inherent in Kenya's public health system. And then on the other side, in the public finance system. When you have a crisis which allows us a collision of those two, the convergence, then obviously generate some of the consequences that we see here. Those risks could have been elevated. Leo says that we are lucky that we do not have a full-blown crisis with COVID. Otherwise, it would have been much, much worse. That's accepted. However, what this still tells me is that it is possible that lives were lost or equipment did not reach the same people, or even harms that could have been prevented. People suffered harm on account of these fractures that we've seen in the officials that we've seen in the management system. One on the public health side, public health management side, whether at county government level, national government level, and then of course on the other, in terms of the pipeline for management of public funds. So the story tells me is what Jackie concluded with is there's work to do around public finance management, but more particularly strengthening institutions that work towards ensuring accountability. So accountability work needs to be stronger. And like her, I'm a little less skeptical that simply asking existing institutions which failed to exhaust their powers will be sufficient. I think we need to ask ourselves, where do we apply what pressure and where do we expose what, and how do we use creatively the reports by the various institutions to make sure that people who, one, had the resources, had the time, had the rules in place, and had the power, fail to work in a way that is consistent with the public interest. So a political economy analysis here is required. I think we need to find new areas to push, what buttons to push And perhaps, yes, institutions must perform their roles. They must get the resources that they do. We need to elevate the role as well of the Office of the Auditor-General, so much more of this evidence could come to the fore. But I'm thinking beyond that, we need a little bit more to be pushing much more buttons, a little bit more pressure to ensure that we have real-time focus to prevent us from actually burdening or asking the Auditor-General to find the money or to find the culprit long after the money has left. But the truth is, I think there's sufficient law, there's sufficient regulations to make the system work decently. And yet that is not happening. So I think we need to ask ourselves again, what exactly is lacking? And asking every institution to play its role, whether it's the EACC in the recovery and the investigation, whether it's the people who are in charge of this procurement and the oversight institutions such as the board of KEMSA, for instance, and all these others. Performance at various levels is required for these complex systems. You're facing a crisis, you have a health system on one side, you have a financial system on one side, and all of them have to be brought together to make sure that the public welfare is governed properly. So we're thankful for the two of them. Thank you very much, Jackie, Leo, and Jackie and Leo for putting together these reports. The reports are available on the IEA's website. The link to this conversation will be available as well after some editing, but we also have the presentation that will be available on our website within an hour. I'd like to thank you all 27 of you who have attended this meeting and for sitting with us for 1.5 hours. We thank you very much, but I'd like to remind you as well, not only that the IEA is an institution of professional members, please consider being a member of the IEA, for those who are not. And the second one is that on Thursday, we have another conversation such as this to discuss the milestones that Kenya's performance according to the milestones that were agreed with the IMF and the World Bank, I mean the IMF specifically, regarding the extended facility for lending, which was the 38-month program that the government of Kenya and the IMF concluded starting from 1st of March last year. So it's basically like a stock taking. How far has Kenya gone? What are the challenges that have arisen? And what's the finding according to the report that was concluded in December 21st by the IMF. So once again, thank you very much and thanks for being here. And a clap for my colleagues, and thank you very much also for being nice people and staying here with us for the day. Have a good afternoon.